Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. This is the Market Wrap. The benchmark indices inching up ever so slightly, even higher and higher to new lifetime highs. In fact, the Nifty today made a closing at a new lifetime, as you can see here, up as much as 37 points at around 11,356. In terms of the contributors, we've had good gains in Tech Mahindra after the earnings coming through. Dr. Reddy is picking up pace, and it's essentially the likes of heavyweights like Reliance Industries and Hindustan Unilever that are actually pushing up the index higher. Of course, strength coming in from Tata Steel as well. On the losing end, some profit taking coming in Axis Bank, Indiabulls Housing Finance, along with Eicher Motors. HDFC now continuing to show more weakness, so that's down by as much as another 2%, followed by Tata Motors also down 1.5%. The advance decline ratio when it comes to the NSE 500 is inclined slightly towards the advances at around 27 gainers for 23 losers. And on the gaining end, we have HDIL, that's up 20%. We have Sensex Plastics, that's up 13%. BASF India, along with BEL, continuing to move upwards. Kitex Garments, along with Varun Beverages, also moving higher in trade. Redington India on the losing end, however, down around 13.5%, followed by Bank of India, Canfin Homes and KIOCL. So a lot of stocks out here which are also losing out, but in terms of momentum, that's clearly with the gainers at this point in time, even in the broader markets. But what are we making of these cues? Let's bring in our markets editor Neeraj Shah to get a perspective here. Neeraj, we have seen consolidation in the indices, but they continue to move upwards.
Yeah, and the mid caps and the small caps, Agam, they continue to move up. But somewhere across the world now, we are seeing the signs, the first signs of there being large, deep gashes to companies which had grown substantially higher and are seeing some misses. So we've seen that with Facebook last week. We've seen that with Tencent in the session today as well. And the kind of falls that have happened there. At some point of time, people will start questioning the kind of valuations that are being attributed to some of the high flyers in India as well. So no doubt they are great companies, the Avenue Supermarts, the Page Industries and the Bajaj Finances of the world. But I wonder whether that is around the corner and something that people should be wary of. Not trying to really scare off anybody or not really believing that that's necessarily the way to go to. But we're seeing that happening now out there, and misses, if any, could be punished badly. Having said that, right now the mood is very, very sanguine. Broader markets continue to rise and shine. Flows don't seem to be too negative, save for that small number yesterday. Flows by and large have stayed steady as well. So let's wait and watch. The big board, Reliance Industries, is performing very, very admirably.
Very well.
And let's see if financials don't really collapse over the next few days and they stay steady, then the broader market strength could continue. In fact, ended the show today asking about whether the strength at the mid cap and the small cap end seems to be there for real. And people believe that the levels, at least on the charts, seem to be much higher. But that could change.
All right, let's wait and watch. Thank you, Neeraj, for joining us and giving us this perspective. But what are our technical analysts telling us about the levels to watch out for? This is what they're saying. Listen.
If you look at the overall setup, as we may see this particular move getting extended towards 11,450, and that's why we remain bullish for the next couple of trading sessions. The only change that we are adhering right now is the trading stop strategy. So I think a stop loss can be placed somewhere close to 11,230, and only a close below this particular level could distort the momentum. So as of now, I think the momentum is very good. The signs are healthy and the move can extend right up to 11,450.
The trend definitely remains strong, and it has been gaining momentum once it took out its all-time high of 11,172 earlier. So clearly reflecting that there is a lot of steam there, and also what we are witnessing is that the advanced decline ratio is also now favorable. So clearly reflecting that there is an upside, but yes, one definitely needs to be cautious at the same time, but any pullback should be used as a buying opportunity. Ideally, Nifty can be looked at buying on a dip of 30-40 points from the current levels. That could be a very good level to enter, with a stop loss of 11,222 and a target of 11,400 on the upside.
Let's shift focus to stocks then, and the first one on our radar is Dabur, which came up with a great set of earnings. In fact, that's also led to a surge in its stock price, which eventually closed the day in the green by quite a margin. We've seen gains coming in when it comes to net sales moving up by as much as 16%, margins expanding to 18.6% against 17.3%, and profits moving up by as much as 24.5% on a year-on-year basis, both the top line as well as the bottom line ahead of consensus expectations. We must remember the underlying volumes growth here at play, which has led to such growth, is 21%, and this is much higher than what the street was working with, and that's also the reason why we have seen the tremendous strength in Dabur, which has moved up and which has been relatively lackluster in comparison to some of the other FMCG companies in terms of price action, and that's the reason why it's starting to catch up with the rest of its players. On the losing end, there was another stock which did see substantial weakness in trade, and that's Interglobe Aviation. We have Somit Sarkar joining us to give us an idea about what's behind that down move. Somit.
So it was not only Interglobe, but it was the full aviation pack, Interglobe, Jet Airways and SpiceJet, and that is mainly because of a weak earnings reported by Interglobes in the first quarter of financial year 2018. So it was a mix of higher fuel cost, lower yields, rupee depreciation and higher other expenses that weighed on the financials of Indigo in the first quarter of financial year 2018. Now in Q1, rupee depreciated by close to 4%, because of which the company reported a forex loss of close to 246 crore rupees. Yields were also under pressure in the first quarter, and this was the second consecutive quarter where the yields were under pressure for Indigo. Also, if you see, fuel costs were higher in this quarter. ATF prices were higher by around 27%, because of which the fuel cost per seat kilometer was higher by around 30% at 1.52 rupees. So all in all, it was a double whammy for the aviation company, with lower revenue and more costs that weighed on the financials of the company in the first quarter of financial year 2019.
Samit, thank you for joining us and giving us those details. So plenty of stocks out there to watch out for. And we keep an eye on the index specifically, which is closing at record levels on a daily basis. Does that trend continue? Let's wait and watch. But with that, it's a wrap on the markets. But lots more lined up, so stay tuned in a moment.